Hey, friends and family. Happy Labor Day. In this video, I want to try and show you my approach to investing in sectors. Not something that I had, it was normally on my radar until I started with the teaching portfolio. My focus has mainly been on stocks, but for many of you, sectors are more appropriate and obviously take a lot less work. And it is working because Janice's RSP was started this in the middle of July, and she's up 5% in the last 7 weeks, just investing in sectors and getting in and out. So it does work. So why sectors? Sectors are, if you look at switch this chart to the Standard and Poor's, when you look at the S&P, the market as a whole, to me, is not investable. But this represents, the S&P represents 500 stocks. And within that, there are a whole number of sectors, some of which may be doing okay and some are doing poorly. But on average, the whole thing is weak. So with sectors and reviewing them, you can find the ones that are showing strength and at least put some of your money to work until the market as a whole starts to recover. So that's why they're important to look at. Now, just a quick review of my setup here. Again, I think you've seen this before. On the left, I have my weekly chart. In here on the right is my daily chart. The magenta line on the daily is the 200-week moving average, and the white line is the 50-day moving average. And on the weekly, these correspond to the 40-week and 10-week. Now, you probably don't need both of them. I just like to see a longer term view. The weekly chart goes back. The part that you can see on the screen is a couple of years, whereas the daily goes back about 6 months. So it just helps me put it in perspective. Also, if I make this bigger, I can go back like several years. So it gives me a better viewpoint. Now, your brokerage firm that you're using should be able to have these charts set up for free. There's no need to pay for any charting service. So if your broker doesn't support any form of charts like this, I would get a new broker. On the right side, the very right side here, I have a list of about 75 ETFs that I follow that represent all of the various sectors. I have them sorted. They have the Canadian ones at the top, then I have a space, and then I have a whole bunch of the ones that trade in the US. 75 is probably more than you would need. And if you'd like, I could, if any of you are interested in a list of these, I could either send you the list of the whole 75. You can build it on your own, or maybe I can condense this down to like 30 of the most important ones. So that's the basic setup. So what I'm looking for, obviously, in my style, now, this is just my style of investing, is I'm not interested in anything that is trading below the 200-day moving average, and particularly if it's trading below both the 200-day and the 50-day. They're just not of interest to me. But that's my particular style. So that's the first thing I do. I sort of step back and let's look at the overall market. This is the S&P, and it's clearly below all of these averages. If I look at Toronto, it's the same thing. We look at the NASDAQ, the same thing. So from a broad picture perspective, the market is just not investable right now, and investors should be 100% in cash, just waiting for things to improve. But however, there may be some sectors that are showing some promise that we could invest some, not the whole account, but some in. So let's just review these, and I'll show you how my analysis. I won't go through all 75, but we'll go through a number of these, and you'll get a flavor for what I'm doing and how you should look at these. And you can go through them very, very quickly. And as follows, we'll start with the Canadian ones. This is the Bitcoin ETF, and it's way below each, so I'd just pass on that one. This is emerging markets, same thing, it's well below the 200. Wiggling around the 50, but that's not of interest to me. This is the energy index. Unfortunately, I'm not a big fan of oil and gas, but you can't ignore the chart. And this is clearly above the 200, and it's just hanging around the 50. So this one is actually, I would put this on, write this one down, put this in a separate list, and keep an eye on this for the next week. This one could be totally investable. As an, without getting too much into the weeds, if it goes above Friday's high, you put a stop below Thursday's low, and take a small position on that. XFN, which is financials, again below everything, ignore it. Gold, ignore it. Information technology, below. Materials, below. And this is basically, I would go through it even much faster than this. Ignore. ZDV, that's dividend fund, ignore. Ignore. Oh, this one's interesting. This is utilities, however. So utilities are showing some strength, which you would figure it's a good guess that this would happen in a down market. Institutions are going to gravitate to basically safe dividend producing stocks, and so more money would flow out of what so-called riskier investments into utilities. I don't see a lot of big upside in these things. I tend to avoid them. I can find other ways of getting safety rather than just buying utility stocks. But that's just my personal take. So let's look at some of the US ones. This is high yield bonds. Bonds, forget about it. China, forget about it. Blockchain, forget about it. Natural gas. Now, natural gas is trending above the 200, above the 50. Looks good. The only thing I would avoid, I avoid this one is because there's huge volatility in this. And if you're going to be holding this overnight or for a week, you could have some massive big swings. So it's not for me for that reason, but it's definitely positive. Corn is interesting. Again, it's a commodity play, but it's trending above the averages. It's come down for 5 days in line with the market. But if you were to draw a trend line here and were to get above, say above 27, you'd have a stop under 26.20. This could have some potential for a run back into here. So this would go on my list. Same thing here. This is the agricultural ETF. So it's bouncing around the 200-day moving average. It was above. We bought it. I bought it here, sold it here for a nice little gain. And then it's come below, and then now it looks like it wants to come back above. So you can get whipped in these a little bit when the moving average is flat. But again, this is worthy of putting on my radar screen. Now we get into a whole bunch of country funds. This is Australia, forget it. Actually, I can skip through right to the bottom. The only one of these I know is of interest is Brazil for some reason. And Brazil was trending down, then it turned a little bit. Bought this here actually, and then sold it for a nice gain before it crashed. But this one is potentially of interest. Going down. So I think you get the idea. I won't belabor the point. I'm just going to go through this very quickly. This is basically how quickly you should be able to go through these sector ETFs, and then just stop and highlight. Well, here's one. We'll stop and put this on the list for further investigation. This is the Clean Energy Fund, so it's above the 200. It's right around the rising 50. I don't see logical entry quite yet, but this would be worth watching. So that's the approach I take to scanning for the sectors. This is something that I think each one of you should potentially set up on your broker platform, this kind of a setup, and do this review once a week, once every couple of weeks. And if you have any questions or need help on that, then by all means reach out to me. Good luck, everybody. Cheers.